Welcome back, everybody. Andre here from fxSSS.net. When it happens, we're there. We will take you there. Okay. Before we move on to all this TDI and the tricks and treats and all of that we have in store for you, I just want to explain to you these particular indicators we use, and these will be available for you to download from our website to use at your own leisure. If you see any sense in deriving any benefit from it, please download it. There'll be short videos on these, how to implement it, where to place it, and it becomes a bit tricky, but to me I find it very, very beneficial. Okay, so in front of you right now you have, this is a GPO on a 1 hour, and these are 1 hour candles, obviously. And the very first thing of Peter Market Maker, Steve Morrow, is the 5 EMAs that he gives you. And these are preset on your chart. It stays there. Right? And for me, it becomes a bit of an annoyance now and then, because I enjoy estate on my chart. I want to see what's going on. So, yeah. That is Steve Morrow's 5 EMAs, and you can see there's a blueberry, there's a water 50, there's the ketchup, and there's a mustard of 5. The green one is the mayo, which is a 200, which is white, but I can't use white on white here, so I turn the mayo into green, right? So this is actually the EMAs, the 5 EMAs that Steve Morrow presents to you to be used on your charts. And he also makes mention of the fact that the 5 and the 13 are his personal choices. You can use anything else that you want to. And I have opted for the whole moving average, right? And I'll show you that when we move on soon. Yeah, very soon. So you have these here, and you can switch them on, switch them off at your own will. But sometimes you don't want to see all of them at the same time. You just want to see the 5 and the 13, right? So what I do is I bring on the 5 and the 13. And there I have my 5 and 13. And what's nice about these EMAs is they're color-coded. So when you're going long, it's blue. When you're going short, it's yellow. And you know exactly where to end on these, or where's a good place to end, right? If you put in Steve's this particular one, you'll notice they're the same. Okay, more or less the same. Just check them. And if you look here, the 5, the 13, I put the 200 in. Right, there's a 200. I put the 50 in, and there's a 50 covering that. So if I take his out, you'll see there's Steve's EMAs, right? The 5, the 13, the 50, the 200. I don't have the 800 here. I haven't developed one, so to say, to put on the charts. If I need to see it, I'll just see there. Okay, it's lying above 800. Things are nice, right? So that's the first set of indicators we use. We use them either individually, as we have here. Okay. This, you see, this is always the issue with the one indicator. That one there, I'm going to show that to you. So when you need to see a bounce over 50, just click it. There is your 50. You need to see a bounce over 200, just click it. Now you got this situation here where you're looking for bounces and all of that and so on. It's up to you. It's all a personal preference. So you have these indicators here. This here is the whole moving average. Because Steve gives us that level of allowance to say, you know, at 5 and 13 is his personal choice of EMA. I opted for the whole moving average, which is pretty fast. There's one even faster than that, and this is the Zurich moving average, which I just haven't really gotten around to using. And you can use a Zurich moving average as well, but that one was pretty fast. As I shown also that in the first video, that this green line is actually a 2 moving average computed around the RSI 21. So these things need to be similar in their movement. If I put up a 5 EMA, this is Steve's 5 EMA, this is my HMA, and they're more or less in the same direction. They are in the same direction, but mine just closes sooner. You can see his closes over there. Well, his doesn't actually close because he doesn't give you the option of when the EMA changes direction and color. It ought to change there, right? And you can see that with the 50 there, it changes color there. It doesn't give you that option. But I've opted for the whole moving average, and there's my whole moving averages. And I run my computations of these. And I have a 50 hour also. So let's just take the 5 and the 13 hour out. Take the 5 out, put the 50 up, and I just need to show you this, and then we move on. Right, so I will close in the same place as Steve will on the 50 EMA. Yeah, I will close sooner. He will close on that candle there. Or the whole moving average, I will close on this candle here. We close more or less the same there. The 50s are, well, here's a big difference here. I'll close there, somewhere there, and he will close, well, he won't close yet, right? But I will continue on. So, you know, it's not one is good, one is better than the other. It's just a matter of personal preference. I will close here, and you can see it's ranging here, as you can see. And it's just a matter of, do you want to waste time waiting for this thing? It did actually act in our advantage because it's going up to that order block. So Steve's one here beats my whole moving average 50. Right. So it's all a matter of preference and choice. This is what he's given us, but I don't think on the 50, only on the 5 and the 13. So on the 5 and 13, we can make the same decisions. I will go there near the peak, and he will go out somewhere here. Right, there's a difference in pips here. And so we go on. I will go out there, come back in. He will just continue and close out there. I will close out there. There's a difference of pips here. So let's not be too paranoid about that. It's just a matter of personal preference. And that's what I have, and that's what Steve has. But the 50, the 200, and 800 seems to be a no-go area. So that's a halves, that's a moving averages, that's on and off. The thing that keeps annoying me every time you see is your news event, right? Your news event is important because you can see a news event happened right now, right? And that news event is displayed here. This news event here. There was news event at 2:30 here, GMT +2, right? And there was another one. There's also the GDP, the gross domestic product, quarter-on-quarter, fourth quarter, that took place at 3:25. And there's it there. So when you click on a line at times, it comes up. So when I'm clicking, for instance, on this here, you'll see that that comes up because it's not hidden behind the indicator. It's actually part of it, and it becomes quite annoying. So you switch it off. But I recommend putting a news event reader. So look, if you're going to trade the news, fine and fair, this helps you. If you're going to stay out of the news, this helps you. So this will be up on the charts, on the website for you to download, the news event. Right. The next one that I like to show you is your candles. Now you look here, all these candles, these are 1 hour candles, and I don't see any day in here. So I switch on my day box, and there's my day box. So these all 24 candles in this day here. So I can see more or less what's going on here, day movements, right? If you go with a 1 day candle, you'll see that there were 3 blue candles, right? We can do that quickly. 3 blue, 3 bullish, 2 bearish. And I just go with a 1 day candle. Come on. On a 1 day candle, we said there were 3 bullish, 2 bearish. There's a third bearish there. So let's just make sure. Let's switch back to 1 hour candles. We want to see 3 bullish, 3 bearish, and then a bullish. Right, let's remember that. And there they are again. Okay, so that's your day box, but you actually have a day candle as well. And these are your day candles. Right? And what's nice about the day candles compared to the boxes is if I take my sonics out, you can actually see the wicks on a day candle. And these wicks represent peak formation high, peak formation low for the day of that particular pair. And it's pretty nice. These 1-day candles on a 1-hour chart, and I can switch on my 1-hour candles and I can actually see the movement in them. Why did that become a peak at that time, and there's a peak at that time, there's a peak there only, at the end of the day, and at the beginning of the day there's peak formation low, right? So in here, this is a 1-day candle, and there's meaning of it. There's a 12-hour candle. Come on, misbehaving. Let's just move on. There's an 8-hour candle. Now I like the 8-hour candle because it's a session of each. It's candle of each session. And this helps me to understand the levels that Steve talks about, because these levels really confuse me. These 3 levels. And when they don't happen, then I just politely tell you there's a reset. And there's no rule behind the reset. It's just, well, those 3 levels didn't take place, there's a reset. So I won't say I ignore it. I remind myself that these levels, I look for my EMAs in those levels, I see whether there's a lock or not, and I decide, and I make a decision from that. Okay, so yeah, these are 8-hour candles on a 1-hour chart. You have 4 hours, you have 30 minutes, 6 hours, you actually have 6 hours as well. You have a 2-hour candle as well, and so it goes. How does this benefit you? You're going to pick this up in a video that follows this. But the nice thing is, you don't have to move between all these charts. All you need to do is just switch your candles on and off. And you don't have to go switch on a 1-hour candle, a 1-day chart, a 4-hour chart, because sometimes the platform kind of slows up, freezes and so on. So you can just sit here and change your candles about on your chart itself. Right. So here's your 1-hour candles again. There's my 8-hour candle, and those are my 1-hour candles in that 8-hour candle. You ought to see 8 candles in that 8-hour candle, 8 1-hour candles in that 1-hour candle. Right, those are the candles you use, and you'll actually see how this benefits you in the following one, where I bring up how to use a TDI with all of these added indicators if you're going to use it. The next one is a semaphore. Now, semaphore is also known as ZZ or 3-level ZZ trading. And there's something I need to point out here in terms of semaphores, is that semaphores are known to repaint. They don't actually repaint. They readjust to what's happening in the market, right? A repainting candle is something that readjusts itself to the situation in the market, especially with the semaphore. Now, a semaphore on its own is not good. It needs confluence with another signal, right? And the signal that I normally use at the semaphore would be a supply and demand, right? Or a support and resistance. And if I find semaphores in those zones, then I know that there is some activity here I should be aware of. The semaphores that we use, guys, is a 9, the 36, and the 81, right? And the 9 is used for intraday retracements on a, let's say, anything between a 15-minute and a 1-hour candle. A 36 gives me trend and direction, and 81 gives me overall direction. So let's put them up. So this is your 9 semaphore, and what your 9 semaphore basically does is, you can see like here, higher high, higher low, higher high, higher low, right? The fact that it's maroon up there means that it's a sell. Maroon up there is a sell. Blue down here means it's a buy. And when the signal comes to you, it's going to tell you there's a peak formation low, or there's a retracement, right? So get ready for a buy. There's a retracement or peak formation high, get ready for a sell. These are the signals that come to you. This is a 9. And if you look at a 9 in a 1-day box, this is peak formation high and lows during the day. Okay, there is another signal, another semaphore behind it, but it's too erratic. It happens far too often for you to receive a signal on it, and that's a 4. And those are your 4s there. I'll give you the 4 semaphore, but I'm not going to give you a signal on it, because these do repaint radically, and they're not that reliable as compared to the 9, the 36, or the 81. So I'm going to take this out. leave my box in, and I want you to see this here, and this here, take the box out, and you can see here, okay, higher high, higher low. Not quite a higher high, but it never broke that high there, but still it's higher high, higher low, higher high, higher low, higher high, higher low, and there it's starting to range. And those who study ICT and Wyckoff, I can see some type of possible distribution taking place here. But that we're going to get onto at another stage. Wyckoff, ICT, and so on. That's when you become a bit more mature and advanced in your training. So these here also benefit you in recognizing double tops, double bottoms. Right? So that's a 9 semaphore. I'm going to take this out. Take that and put that in. And here's your range between the what constituted the high. Well, this is the two. It ran between these two here. Right? It ran between this. Okay? And that's your direction. And your overall direction. This is a 36 semaphore. And that would tell you your direction for the day. That would work within the confines of that 3-day movement that Steve talks about so often. Because you can see it happening here. Well, not 3 days because of the resets, but it's 1, 2, 3, 4. And on the 5th day, something's happening. And something's happening here. There's that lock taking place. And it's going to range up and down here. And eventually it's going to come down, according to Steve. But how do I know it's going to come down? Well, I'm going to rely maybe on my 81 semaphore. And that there confirms that the peak has been reached. Here you can see from this here. This would be regarded, I don't know, as a reset. But from there to there, and then there was a movement back up, right? And then it came down. So semaphores are helpful in the sense that they give you your direction, your bias, right? They help you to identify retracements, peak formation highs, peak formation lows. At times they also point out patterns to you, right? Inverse head and shoulders, double tops, double bottoms, and so on. If you can read it much better, you can see a triangle at times. It's all up to you how you actually want to look at the semaphore and the ZZ behind it. Okay? I haven't put an overall line for the 81, but it can be done. It's just a matter of 2 minutes coding, and it's in. But the overall trend and direction, the overall, would lie within these big blocks here. Okay? And from there, you can start looking for your 9s, your 36s. You can see your 36 in here. There's your 36 to 36. And your 9s, your retracements, your peak formation high, peak formation low. Your 4 is just too much to be reported on, but you can monitor it yourself. You can get the semaphore if you want it. Right. And that helps me, like I say, with confluence, with supply and demand, support and resistance. Okay. I can see the semaphores up here. So there's something I should be aware of here. And to start trading here, in terms of buy or sell, I'll hang on a bit. That's your semaphores, right? So those are the tools that we use. There's one more, and I don't use it, but you could possibly take it if you want to. If you're not going to recognize a double top or double bottom here, or just without it, let's switch all of this off. And you can see a double top here. There's one maybe. Double bottom, Steve would recognize that as a double top and start trading down. There's one more that we use. And I'm just going to add it in instead of bringing up a template. And that's your price pattern. Right? Here's a double bottom. Here's a double top. Besides that double top, this pattern picked up a double top, but it only went till there, right? And now it's going up. So it's to write a signal on patterns is not easy because this thing didn't pick up that double top, which is important to BTMM traders. That's very important, right? That spike and all of that, and then it goes down, right? But what helps us there is a semaphore, and you're going to get a signal on it. And was that a major semaphore? If a 36 showed, then it's major, right? And it's your peak formation high. Now, if this one breaks it, yeah, then this semaphore will no longer be the peak formation high. It will now be there, but the 9 will remain. Okay? You have to learn how to use these semaphores. You can't use them on your own. Cannot. It needs to be used in confluence or to ascertain the trend and direction of the market at the time. You will get signals behind it, peak formation high, peak formation low, retracements, right? On the 9, you will get 2 candles later, a semaphore has taken place. It's a possible reversal, right? CTU semaphores signify breakouts. Breakouts signify possible reversals. And as we done in one of the videos, before I end off, let's enlarge it. You can always see that these semaphores happen at like shark fins or volumes, you know, the big ones. There's a volume there, there's peak formation high, there's shark fins. These are all confluences. Can you see there's that double top Steve talks about? We don't see it here, right? Those are the indicators that help me trade. I don't rely on it singularly on its own. I use it as confluence, and I look for trend and direction, and I make a decision on it. You're going to have to analyze this. And in the one video where we bring in the signals, we take a look at how much pips do you need for the day. You know, if you're going to be that guy that's going to want this whole range here, let's minimize this. I want this whole range here, but I don't want the drawdown there. You know, then you're not the guy that should be trading. There, I'm going to take that, get a signal, I'll enter this trade, I'll get a signal there, 2 candles later I'll get out, because look what happened 2 candles later, right? And then I may get a signal to go back in, but I get a signal again 2 candles later to get out, or to start selling, and you can see what happens. I'm going to get a signal 2 candles later, I'm going to get it there, that the semaphore's taken place. If I was in that up trade, this up trade would give you, let's say from there to there, 2 candles later there, you know, 29 pips. That's a lot of money, you know. You're not going to get it there. But this one, you're going to get 1 hour later, 1 candle later, you're going to get it there. What's nice about the semaphores on higher time frames, if you look at a 4 hour, is that they're somehow more reliable. You know, you're going to get a semaphore there. Oh, these patterns are in my way. But you're going to get a semaphore there that this has taken place. And you enter a trade here. Yeah, now then get out. You know what I mean? You gathered so much pips along the way. So those are the tools we have to use. It's going to be explained to you further when we show how to collect your pips, so to say. The next video after this one will be the TDI tricks. So thank you very much, guys. Hope you enjoyed this. Join us for the next video. Cheers.